So last time nentse re bua ka candlestick patterns and modifying in the markets and how that can help us to set up trades, whether you buy or you sell at extreme highs and extreme lows. So today we're just taking it a step further to say, despite candlesticks still refer those warnings and indicators that this might be a time to buy or time to sell, this is a time to talk about those extreme levels in the market sale, and they refer places to buy and sell, and sometimes they don't depend on candlestick patterns. It is just the way the market looks e ka o fang an indication ya hore na you're supposed to buy or sell at what location. So to start off, we talk about the way the chart is shabalangating. So meaning we're going to look at a pattern a chart eating. If it's a market that is going up, we're going to see right now, do we have some common patterns in this chart, or do we have the thing? So but basically for today we're going to talk about two types of structures we trade in the markets, basically support and resistance. This is the most important topic in the market, support and resistance, because how so can I into more advanced topics studying supply, demand, indicators, all of them are based on support and resistance. So support and resistance are the zones in the market whereby the market is tested, the price in the market is tested at least 2 or 3 times. So if we have a market that is going up, comes down, goes up again, comes down, this place in Ekatlasi, we can take it as possible support level. See, so if this market decides to push up again, okay, sorry, this is wrong instrument. So if this market decides to push up again, at this point we now have 2 points that we consider as resistance, and at these 2 points usually at this third touch raising our sell trade, hoping that the market will continue respecting support and resistance. In this case, we'll continue supporting the resistance and going down. Similarly, at this lowest point here in the market, you have 1, 2, 3 touches. Therefore, the 4th touch might also act as our support, and then we will take our trade here. Our buy trade at this lowest level here, and saying at this point we hope that the market will go up. And since we've talked about candlestick patterns, what you're going to do is to look down here. Do we have any candlestick pattern that may indicate that the market doesn't want to break this support? Because remember, support and resistance, they don't always stand out, otherwise the market in the same direction all the time. Support and resistance get broken at times. You see the market come to resistance level, instead of going down and break this level and continue going up. But it is still worthy when you see support and resistance in the market, you still take the trades, and if you lose a small amount. If you win, you win a bigger amount, for as long as the market goes your direction. And remember again, if the market decides to not respect our resistance, if this was the resistance, it decides to break this level, what we want to see happen is for the market to come back to this level of resistance, and make support out of this level. Meaning at this point, instead of sell hoping that it goes down, since it was already broken, we are now saying if the market comes back here, we want to buy, meaning this is a retest of previous resistance, turning it into new support level, hoping that the market will go up, maybe retest it again, and maybe it's a support level, maybe also hold you. So that is basically it about support and resistance. So we don't just have support and resistance in a market that is going in a range. We also have support and resistance in a market that is going in a certain trend, uptrend as such. So similarly, Mona, we are going to have support level at this levels here. This will be our support, and up here we can have our resistance, and these are called trending support and trending resistance level because they are occurring in a trend. So instead of that one that is going sideways, this one is going in an upward direction or a downward direction. So we are saying if the market in the reverse at this point here, at this point here, possibly the third time it approaches this level, it is going to go up and test our resistance, trending resistance here, come back here again. So we have it both ways, as you can see. In the market ends they are up down, or the market that is predominantly going up, but in Zebali those moments of creating support and resistance as it trends upwards or downwards. So let me take you into better constructed examples. So Monana, we have our uptrend, ne? And as you can see, it is not that smooth, but still, like I say, that smooth, we can still find our areas of support and resistance. So if you are in the market and this is what you find in an uptrend, okay, we have some form of resistance here and some form of was resistance here, and it turned into support later on. So Hanere color at this stage here, and then the reflection on this market from here, we didn't take any trade, and the market went down. High filter here, it went up to this level, it created this new high level, and it came back down here. The moment it lamona, we can start taking our trading decisions based on the fact that the market was once here and now it is coming back to test that level. You can take your trade here, but if you don't trust this structure or a good structure to take your buy trade, you can wait for the market for a new lower happen and possibly hope that it comes back to test this area. So at this level right here, whereby the market comes back, you see, okay, now I have this level as resistance, support and support, so I can take my buy trade. So you're going to take your buy trade, and if the market goes up as it has here, you're going to win this position as it goes up all the way to here, and then the moment Isekaya reverse, it goes down, you exit your position with a profit, and you just watch and wait to see what is along in the market. And if you see the market coming back to this area again, you can say, okay, this market, it's becoming support again. So we'll zoom in and look for the candlestick patterns. Do we have a doji? Do we have a hammer, inverted hammer? Do we have an indecisive candlestick? Do we have a shooting star, morning star? There are so many names of this candlestick that rejection, but basically the candlesticks they have a small body. Remember, they have a small body and a large wick to the downside, or sometimes another large wick to the upside, showing hore at this level down here the market was rejected, and similar, so we are indecisive. The next candlestick, however, will tell us after this indecision, where are we going? If you see by a green candlestick, we say, okay, the market was indecisive, but from the next candlestick onwards we had a bullish candlestick, which is a green one. So meaning this market wants to go up, and it will somewhere around here, right above when the market remains an indecisive candlestick, and it will again with your buy trade, and you're going to buy for as long as the market goes up. And as you can see, when this was going to be a bigger winner, you're going to win, and by the time the market reaches here, and then Obana also tour and all, you can say, okay, now I'm satisfied with the profit, I'm exiting this market. You see, So similarly, the one out demo monan or not over this point being tested, you don't take any decision. Demo, come back. By the time it does this second touch, you can connect these two levels and say, okay, this is a potential trending support level, and then you do this, and then you do it up here to trending resistance. You see, okay, so if the market is on solo one, you can take your sell trade here and say, okay, I'm going to sell to this level. But this is something I do not advise people to do. You don't always take support resistance how they bond. If the market is predominantly going up, like this is an uptrend, right? So this market is going up, you don't look for sell trades. Instead, happens when it reaches this level, you wait for this market to do what? To come back down here. And how it down here, this is where you take your buy trade, because this level here is really a third touch from 1 2, it's about a third point of touch, and as you can see here is really resistance, and now we are hoping this resistance will turn into support, and we want this market to go upwards. So we'll enter with our buy trade and hope that it goes on forever if it may. Similarly, on this side we have a downtrend, so everything that I talked about this side, we're also going to apply it on this side. It's just the opposite. If this market is going down and how monana, it doesn't continue going down, it comes up down, almost trapped in a channel in an monana. So when this happens, we can take our sell trades here and here, and how reverses a little, goes down at this level, how to this level here. This is where we can put our sell trade, because we have this level as support, and now it is being turned into resistance, and this market overall is trending downwards. So we're going to do this at all these crucial stages of this market. So it's just the opposite of what is happening on this side. So that's what we have on support and resistance. But let us look at another example. Yeah, in a market is saying up or down, which is the third type of the market, which is a ranging market. So this market is not in an uptrend, not in a downtrend, but instead it is ranging. It is ranging. It is in a range, or it is in a range. Or if you want to say it's a trend, it's a range trend. It's up to you. You want to define this market as what. So in this market, we mean the market is not predominantly going up, neither is it being dominated by downward movement or sellers. So it is just in a bound. It is trapped in a range between price setting and price setting. So this is where by letting to see our support and resistance happening in the market. So as you can see, at this point, the range in it, and then it makes resistance, but we don't take action here because we don't have at least two touches to say this is support and resistance. By the time okay, we still don't take any trading decisions, but as it comes here, this is our second touch now, resistance. We may take our trade here, but if you are a trader further confirmation, you may not take your sell trade here. Wait for the market to see is this really a range or not. By the time if you come to this level, you say, okay, now I have 1 2, and this is a possible third touch. You may take your buy trade here, and then you buy, and as the market goes up, your target is to exit at this level, which is the third touch of resistance. And how get we exit you enter immediately after one candlestick patterns, or even without seeing them, you take your sell trade and say this is a third touch trade as well. You sell and hoping that by the time it gets to this level, you will exit your trade with a profit. But as you can see here, in it like something like it breaks out of the support level, which was not really a breakout because it into this market. So exit right here, after exiting, even you plan to buy again. So maybe after buying, you're going to not make a profit this time but a loss, because this market that's so fit. And then you wait and see what happens. So it goes up again at this level, which is now midpoint of leveling yenana. There is no previous structure here. You don't do anything at this level. It goes down and you say, okay, fine. High fihla mona, since this is high sokaba a second touch as much, you don't do anything. Remember, we start taking action at least from the third touch for us to take advantage of a range in market. So in this case, it doesn't make the second resistance point, but it goes way above and comes back down here. By the time it and if it reaches this level, any resistance, now we are saying, okay, at this level now, this market has come back here, meaning buyers and sellers are going to be well aware of the market was here. Why is it coming back down here? Maybe because people are interested in this level to take their trading decisions. So you were going to put your buy trade down here, which should be at this previous level here, you see, and then you're going to make small profits, as you can see, from all the way from here to here. Maybe not ultra when the market now starts going down, able to on a small profit. Similarly, when the market comes down here, the market was once here, but for me, I was not going to take this trade. I was at least going to wait for the market, because we now have this level here and this one right here too. So I was not going to trade here. At least I want this market to reach the lowest point for me to say it is a strong point whereby the market can reverse, which is where the market is currently. So okay, now I have this level in a support here, and for the second time market to reach Hamonana, since it hasn't been here in a while. Maybe now buyers and sellers are interested to take their trading decisions at this point. So I would buy this market at this area and hope that it goes up. I would be interested in buying, but market don't really in a close range. I will wait for the first touch, second touch, and on the third touch, that's when we take our trade. And then the market will wait another support level which it has here, and then by the time of leveling, after a while, then you can take your buy trade. So that is basic support and resistance. But let me show you here where we have the actual market. So as you can see, Monana, in this presentation, we have these points in the market that are acting as resistance, and resistance. Here we have support and support. So in this market, preferably if it was a downtrend, meaning the market was going down, and then I've also buy in this range in it and come back here, maybe be interested in taking your sell trade here, or if you want to wait, not at last, by the time it gets to this level again for the third time, making it resistance 3, or not longer your sell trade here and hope that this market goes down further. Similarly, we have this market trailing, it reaches this point, and look at this candlestick pattern. It is that indecisive candlestick pattern let's already betting in the market at these zones. So how it becomes support, but we don't take our trade. It goes up, down, how reachy this uppermost level or this down level here. Okay, monitoring in the reach, so maybe not longer your trades based on all these candlesticks here. Say, okay, now I'm taking my buy trade, nothing until market to fitla monana, and we see this indecisive candlestick being created. But when one of these candlesticks had get created, you always say, okay, now the next candlestick is going to be a green or a red one. But just look how big this red one is, and right here, which is not a good place to enter in the market, because this candlestick is for you to enter here. So sometimes candlestick pattern about created like this indecisive candlestick, but maybe the following candlestick, instead of being just an average size candlestick so that we can hand like a double created also sure now the market wants to go down, it becomes so large that it doesn't give you good risk to reward, which is something we'll get to. So it is a way for you to enter this market. But maybe as it comes down here, you see we have this dragonfly candlestick being created at this support level, followed by a large green candlestick, but maybe not like because this one is not obviously is not as big as this one, not like I'm hoping you will ride this market until it gets to this point here. So this is another example here. We have support and resistance up here, as you can see. But once this market it makes this high momentum candlestick, it breaks this support level and it comes back to make it resistance. And at this point, after this green after this red candlestick formed, you are going to put your sell trade. After pushing a sell trade with the hope that the market goes down, as you can see, in losses for a while until over in profits. So we also have this example here of a live market whereby this became support, and at this point support was broken. After the market broke this support, it came back to test this support level, turning it into resistance. So you're going to wait for this candlestick to close, and after the next one you enter this market hoping that it goes down, and indeed it does go down. You get in profits, and then the market look like and when it gets back to moon with anything, you may hold, right? You hold this trade, you don't exit, and as you can see, the market, if it's like a consolidator for a while until it goes further down, giving you more profits. And now we come back to which was support and resistance happening in the market that is going in an upward or downward direction. And in this case, this is an uptrend. As you can see, we have support, and up here we have resistance. So in this market in Ziahudim, it is not wise for you to take sell trades on resistance levels because it is going up. So this market is going to go up, come back down here, go on here, not like with your buy trade or at this point. But this is the most trustable point because isekile yaba support here, and this is the third touch, and as you can see, in a resistance here, and now it is being turned into support. Then you're going to buy this market and you'd be in profit. Similarly, we have this market that was creating this trending resistance in a market that was going down previously. So we have resistance. At this point, the market decides to go further above and break this resistance level. So after it breaks, as you can see, it spends some time without coming back to this level, but eventually now we have indecisive or rejection candlesticks indicating that the market wants to now turn this trending resistance into trending support or into support level. And after that, you enter this market with a buy trade and you watch it go up, giving you profits. And for my last example, it's the same thing. It's a market that reverses at the zone, goes up, comes back at this level. Maybe you do not buy, as this chat says, because how sure is this really a market that wants to really trend upwards or not? And then it comes back up, high fishamo. Now is the point whereby you can say, now I'm buying, because you have this level here, this market structure, wanna buy or buy here, but no really, because you were not sure yet if this market is really making moves to the upside. But yes, you buy this market and you hold, you get into profits, and then you come back to your initial. You may buy again or choose to hold, buy in on way and and you don't buy or you buy, it's up to you. But wabona, this market is turning this into strong support level in a market that is trending upwards, and then by this point notably into more profits. But the market was going to push back down again, maybe you would buy because already this is really strong resistance, and you make profits if it goes further up. So this is it about support and resistance. And remember, this is the most important topic in forex trading, especially if we're talking about technical analysis. Very strong, because every trading decision area or everything but whether it's an indicator, Fibonacci levels, RSI, everything that we'll cover in the next videos, all of them are always based on support and resistance, those areas in the market whereby the market tests several times before picking a direction. Very important. Well, according to me, it is even more important than candlestick patterns, because sometimes the market can reach a support and resistance zone and don't give you a candlestick pattern and just reverse instead of giving you a candlestick pattern. So with that, thank you for staying with me in this video, and I will see you on the next video. Thank you very much.